brought to you by NelsonCorp Wealth Management. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Any indices mentioned are unmanaged and cannot be invested into directly. Registered representative, securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated. A registered investment advisor, Cambridge and NelsonCorp Wealth Management are not affiliated. Cambridge does not offer tax advice. Now here's today's Financial Focus program.
Well, what a pleasure to welcome into the studio Dave Nelson. Dave, it's been a long time since we've had you in here.
Yes,
great to see you.
Yes, great to see you too. It's a privilege, and I love getting in here and spending some time. My doc was a little hesitant as far as for me to do much of anything for quite some time, and he's kind of loosened the reins a little bit. So it feels good not putting on the mask. Not that was that big a deal, you know. But overall, health feeling great, and yeah, it feels good getting up here. So
I tell you look back at March of 2020,
yes,
from then till now,
yes,
all that has taken place,
yes,
not only
yes,
us,
right,
but you,
yes,
individually,
yeah,
and you say
yeah,
you're doing great.
Yeah, it was a long battle. I mean, when I maybe have shared this as far as previously here, but I started in town here, and Dr. Barracat said, hey, we need to get a neurologist. Sent me down there. I was there 4 nights and then ended up in Iowa City for about 3 weeks. And down in the at Genesis, and I wasn't throwing them under the bus when I said that, they couldn't figure it out. They had no idea. And so I end up out in Iowa City. In Iowa City, the doc made a educated guess, and fortunately he was right, or I wouldn't be here today. And it was encephalitis, and it was a bizarre type of case. I guess it comes in a lot of different flavors, and I had a bad flavor. That bad flavor was one that really had no symptoms to speak of. It just started with a little tick in my shoulder. And most people that get it, they have an extremely high fever, they've had a blow to their head, they have excruciating headaches and what have you, where they just can't function. And I had none of the above, just this little silly tick in my shoulder that turned into a raging, seizures, basically, is what it boils down to. And so I made it through the encephalitis. That was months, sitting in a chair, basically looking out. And for those that are listening now that can relate as far as the era, but those old kaleidoscope things that you used to look through and see all these little crazy designs, whatever, that's what I saw for months. And so it was a tough situation. But again, there's plenty of people out there that have suffered a lot more than I have. But that was the part. And then because of the seizures, I had seizures every 4 seconds for about 2.5 days. It basically ripped my arm out of my shoulder socket, and so that was out, and then that had to be repaired, but they couldn't repair that until I basically made it far enough as far as on the other. So it's been over a year, closing in on 18 months of not being right, but there's many that'll say you were never right. So anyway, so I think there's a little bit of truth to that, but no, I feel terrific, and I've been back to work for quite some time. I start out a few hours a day, and boy, that was that was really tough as far as to get there. And the wonderful thing is that, again, when you go through this, oftentimes, too, if you do live through it, bottom line is your brain doesn't come back. It's been through so much trauma. Encephalitis, for those that don't know, and I had no clue, never even heard of it before. But anyway, it's a swelling of your brain, and oftentimes they have to basically cut your skull as far as to be able to handle the size as far as how much it's blown up. And fortunately, they didn't have to do that as far as in my situation, and just chemicals upon chemicals upon chemicals going into my body for weeks, and that was good enough. But yeah, I got back to work, and the fortunate part, finishing that thought, was essentially the part of my brain relating to work came back probably the quickest. Then the part as far as family members, I couldn't. My wife said it was over a week before you could drink out of a straw. I mean, I just couldn't connect those dots as far as to be able to pull that off. That had to be really bizarre. I don't remember any of that stuff, so that's the good news. And then she'd hold her phone in front of me with pictures hour after hour. Who's this? And it was grandkids, it was the kids. I had no clue. So it was just a horrible period of time. But yeah, I hope I'm through it. So we'll
I would
see
think
as far
so.
as far as how time goes.
And
So.
I'm great. They didn't have to cut into the skull with that great head of hair that you got there, David.
Exactly.
That would
the
have been,
little that still exists.
That would have been a tragedy, no doubt about that.
Yes.
But the thing is, the business that you have established, even though you were gone,
Yes.
things didn't fall off at all.
Yeah, it was really amazing. I mean, it was about 6 months that I was gone, and the wheels turned round and round. I said for years that that in essence the business couldn't operate without me. And I said there was good news that came out of this. They could operate without me. The bad news is they could operate without me.
Yeah.
So it's a kind of double-edged sword there.
Yeah.
But it was terrific. And most the only people that really knew about it were those that read the paper and saw that Coach Nelson missed another game through illness. And so then the phone started ringing off the hook as far as for clients in this area. But as far as people outside the area, and we've got clients in I think it's now 44 states, most of them had no idea. And again, we communicate with them. We have various check-ins that take place, and it's different individuals, et cetera, that are involved in that process. So, but no, most didn't, and those that do know now, and probably still, I bet 50% never knew as far as what took place. But those that do, it's quite remarkable as far as hearing other people's stories as well, as far as so many people have stubbed their toe in some fashion. And so David Nelson isn't the only one. And I said I got a question for probably, I don't know, maybe 20 people in essence, did you ever find yourself feeling sorry for yourself? And I said, if I didn't, I'd be lying, because again, I don't drink, I don't smoke, I work out every single day, I'm a good person, we give a ton of money away to charity. Why me? And that entered my head a few different times. And then you go out to Iowa City and you walk around in there, and the area I'm going is the neurology department and the cancer department. And so when you go to those two places and you see all of those wonderful individuals that are there, that are just probably day to day in excruciating pain. They look like, many of them, as far as, and I don't say this kind of making fun, it's just they're hunched over. They almost look like monsters, and you just say, my God, I had 18 months of dealing with something. These people probably their entire life they've dealt with this adversity and this pain. And me, I didn't have a tremendous amount of pain. I was very lucky in that regard, but so many of these people do, and go to the cancer department and see these people that are waiting to get their chemo treatments and whatever, and they're just exhausted, and you just, and I'm almost borderline the last few appointments skipping in there because I'm almost back to where I was. And so it just, you just feel so bad for them. So anytime even one of those ideas enters my skull, I need to drive out there and just look at those poor human beings. So anyway.
Well said. Again, Dave Nelson in studio. The one thing that did come out of the pandemic was the ability to deal with people not face-to-face. I know you love to do face-to-face, but the Zoom and the various ways that you were able to still communicate with your clients.
It's incredible. They adapted and we adapted. And again, we have a clientele that's probably average age of, throughout the office, probably 60 to 65 years old. Mine's actually older than that. And I thought, no, there's no way that they're going to agree to this. Yesterday's a perfect example. We've gotten a retired attorney from down at the Atlanta area, and they really look forward to it as far as the face-to-faces, but we haven't had one in several years because they're older, and he's had a few health issues as well. And she's a minister, and so anyway, so they just need to be very careful. But we had just had a great visit, and being able to see people as you're chatting with them, and these people are high energy people, kind of like I find myself being, and it just seeing people laugh and get joy out of communicating, it's terrific. And so yeah, with we've been on the road a little bit, but we had clients out from Utah that came out here about a week or so ago. And quite honestly, for people out of town, that's probably some of the early ones. And it's the first time I've met with people as far as like that with no mask. And they're quite shocked. But I said, I think I'm better. So we're going down this path. We're going to find out.
Again, visiting with Dave Nelson. Of course, the program goes to the bottom of the hour. What are we going to talk about after the weather break?
So we've got plenty to talk about here today, Gary, as far as all the chaos, as far as in the markets and what have you, and what's driving it. And we'll kind of give our best feel as far as, and what we're doing as far as for clients and trying to navigate through this. This is a trying time right now.
All right. Again, Dave Nelson in studio. A check of the weather brought to you by Van's Carpet Corner.
Much nicer day as we kick off the middle of our work week. We'll get some sunshine back, especially this morning. Couple more clouds working in for the afternoon. But temperature-wise, fairly nice. We'll see high temperatures in the mid-60s. More clouds arriving tonight, and that'll start our next round of rain as temperatures drop into the upper 40s. Rain continues, quite heavy at times Thursday into Friday. Temperatures will be limited to the upper 50s Thursday, right around 60 for Friday. But the upcoming weekend, still looking absolutely gorgeous. Saturday, mix of sun and clouds, highs in the upper 60s. For Mother's Day, happy Mother's Day to all the moms out there. You're going to have a picture-perfect day. Partly cloudy skies and highs in the low 70s. With your Storm Track 8 forecast, I'm meteorologist Andrew Stutzky.
Fair skies, 46 degrees, northeast winds. Our update brought to you by Van's Carpet Corner.
Just in time for your spring cleaning and decorating. Van's Carpet Corner in Fulton has some bargains that'll help you beautify your home. Get unbelievable prices on multicolored carpet installed over pad, starting at just $2.29 a square foot. Here's an inflation fighter. Get carpet and vinyl remnants for as low as 99 cents a square foot. Material only. Plus, get closeout prices on vinyl plank samples. Hurry in today before they're gone. Van's Carpet Corner, 1430 10th Avenue in Fulton. Phone 815-208-7020.
Financial Focus presented by NelsonCorp Wealth Management. Dave Nelson in studio with us. Well, in the news before you came in, they were talking about interest rates. Prepare to pay more.
Yes.
Talk about it.
Yeah, it's we've kind of gotten spoiled. I'll use my own kids as an example. Several of them bought homes in the last couple of years, and the interest rates, they're just kind of griping and whatever as far as the difference between 3% and 2.75 and whatever. And I'm sitting there telling them that the first house I bought was 11.25%. It's just they can't even fathom that. But the reality is rates are going up, and so. The example I use, and this is really crucial, and I brought this up last month, and I brought it up the month before. It's worth reiterating, folks. This is important stuff as far as your pocketbook is concerned. I started in 1981, and you could walk into a bank and put your money into a CD and get 16% back then. We look at a snapshot, give or take, about a year or so ago. That same CD was paying roughly zero. I mean, so close to zero. We'll call it zero. And so now what we find is that interest rates have ticked up quite a bit. And we look at the 1-year rates, you look at 3-year rates, you look at 10-year bonds and 20-year bonds, et cetera, et cetera. They've gone up, and they've gone up pretty substantially as far as in a very short period of time. Now, if you own bonds, and this is the area of focus that I've been chatting with people about, understanding that people don't buy bonds to get rich, they buy bonds to preserve capital. And so over the last 40 years, give or take, what people have experienced is rather good news pertaining to bonds because interest rates were very high, they've come down, and if you think back, if you listened to me before, we use this teeter-totter concept where when rates drop, so the one side of the teeter-totter goes down, the other side goes up. And so that's what we've experienced for 40 years up until the last couple months here. So all of a sudden interest rates are going up and the value of people's bonds are going down. So I'll just put it in perspective, and I want to drive home this point because it is really key. And that is that last year, a 20-year U.S. government bond had a negative rate of return of about 6%. So 6%, very rare event as far as for government bonds to have negative rates of return. Fast forward to this year, just year to date. So from 1/1 to right now, if you had a bond 1/1, you bought it 1/1, and you look at it today, a 20-year U.S. government bond, you're down 19%. So it's just hard to imagine as far as that in a period of 18 months, give or take, that individuals can be upside down in a U.S. guaranteed government bond, roughly 25%. But that's exactly what's happening. So that's depressing in itself. But here's the other part that's really depressing, Gary, and that is that the coupon rate, or it's another way of saying interest rate that you get on that bond, is roughly 2 to 3%. So in order to get back 25%, just do the math on this sucker, at a 2% or 3% per year increase, it's going to take forever as far as to recover that. So what we've been yapping about as far as month after month and any time that we have an opportunity as far as to the general public is to say the rules have changed and you need to be aware of this. And the days of just chucking your money into something and falling asleep and hoping that it works out are gone. They're gone, and they're gone forever. So point being, what we try to convey to people is that the stock bond portfolio, so I'll use an example. If you had a 90% in stocks and 10% in bonds portfolio, you're down roughly 15% as far as year to date. Now, if we look at just the exact opposite, so you have 10% in stocks and 90% in bonds, the rate of return, or the negative rate of return, is almost identical. We've never seen anything like this. So the traditional approach of 401ks and the traditional approach of most financial advisors advising people to invest their money is in stocks and bonds, both of which have stunk as far as year to date and probably are going to stink for a while. So what has worked generically, and I can't get too deep into this because there's all kinds of rules and regulations relating to commodities, but commodities as a whole have done quite well. Now, again, I'm not saying to go out and do that. I'm saying there's very few things that have worked. Real estate down for the year, bonds down for the year, stocks down for the year, commodities are up for the year. And again, most individuals have stocks and bonds in their portfolio, and subsequently they're down, and they're down pretty substantially.
So interesting. And, you know, what's it going to take for things to go? Because I know it's always ebb and flow, up and down, but we've been on such a high tide for so long.
Exactly. That's part of the problem. We look at from the bottom of the market as far as in this so-called bull market. So we're going back to 2009 to now. Again, and this is a round number, folks. We're up roughly 500%, literally 500% as we speak. Now, having said that, again, people just can't believe, and many people do, is that this sucker is going to keep chugging along at this level. Now, I have some people that like to refer to me as Negative Nelly. So the last name is Nelson, for those that don't know. So Negative Nelly, hey, you're always looking at the bad. No, I'm not looking at the bad. I'm looking at the facts. And the facts are that people have been overpaid as far as the last number of years. This 10-year run is just unprecedented as far as what's taken place in stocks, but also in bonds. And so our point with people is that they can't continue. There's no way this can continue. And all you got to do is, just turn on the TV and listen to some of the big name stocks that everybody's been in love with for so long. And I'll pick on Facebook for just a second. And it's down quite substantially. And again, I'm not saying buy it. I'm not saying sell it. I'm just giving it as an example of something as far as that's was doing really well and has really had a tough run here. So point being, individuals out there that are invested, you need to have what we, I guess, refer to as guardrails around your money. And most people have no guardrails around their money. They just shove it into this mutual fund, and they just hope that darn thing is going to work out. And our approach to it is totally different, and that is that we have some safety nets that we tell people that they need in place. And if people don't believe they need it in place, again, they've gotten their eyes opened up. Look at your statement as far as when you get it from last month. Last month, the NASDAQ, which is just one of the indexes out there, was down 13% for the month. And so again, individuals are getting slammed. And again, I'm not trying to rub salt in the wound. I'm basically trying to say we got to learn from this. And many individuals have forgotten about the lessons of 07, 08, 09 when things really got roughed up as far as then. And this thing is by no means over. I don't know if it's over for bonds. I think there's still a little bit of downside risk there. But stocks still could have a lot of downside. None of us know for certain. I want to emphasize could and might and all these things because we don't know for sure. But at the end of the day, it's really crucial that people have a plan. And many people really don't have a plan. They just chuck it in and hope that things work out.
Again, visiting with Dave Nelson. He is in studio to the bottom of the hour. Now, Dave, you talked that a lot of your clients are older.
Yep.
Address the people that are younger, because I've always heard you say, nobody complains, I started too soon and
yes,
I put too much money in.
Exactly.
What is your advice to the 20 and 30-year-olds?
So it's again, I was very blessed as far as early on in my career to spend time with this gentleman. His name is Peter Lynch. Really bright man. He was he oversaw money, invested money as far as for a big investment firm. Long story short, he basically said everybody needs this test. It's the 50-50. I know I brought this up probably 100 times over the years, literally, as far as on this program, but just to reinforce it, he said you got a block of money, you're up 50% the first year, you're down 50% the next year, where are you? Well, the answer is you're down 25%. Sounds like you're even, but you're not. You're down 25%. Now, let's put it a little differently here. First year, you drop 50%. What do you need to make as far as rate of return just to get back to where you were? And the answer is 100%. So young people have had it put into their skull by individuals that try to give them good advice, but it's really flawed advice. And that is that you just got to ride it out. You're young, you can take these bumps in the road, blah, 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 blah. Well, again, it doesn't make any sense because, again, losing 50% of your money and then having to make 100 just to get back to where you were doesn't make any sense whatsoever. Just think about it logically. I'm just going to accept dropping 30, 40, 50, 60, 70%. The NASDAQ, by the way, in 07, 08, 09 was down 82%. So that stuff happens. That's primarily technology companies and things of that nature. So younger people need to invest. They should be focusing on, our opinion here, should be focusing on stuff that hasn't worked as well. Most people, they have a 401k at work. The young people that you're referencing, a 30, 40-year-old, they look at it and say, well, the last 3 years, this one's done the best. So subsequently, that's the one I'm going to put my money into. And we're saying, as a general rule of thumb, that's probably the exact opposite of what they should be doing. The name of the game is accumulating shares, and how you accumulate shares is you have to buy the suckers on sale. And again, the idea is the more shares I can buy and control today, the more income I'm going to have tomorrow as far as from those shares. And so again, the only way that happens is you have to be prudent, you have to be smart, you have to go against the grain. When your buddies are all putting their money into X, you want to put yours probably into Y. You do not want to follow the masses because, again, and I know it sounds terrible to say, but it's the truth. If everybody had the game plan and they understood it and they followed it, the bottom line is everybody'd be rich. But what we know is that most people aren't rich because they followed the masses. I'm saying don't follow the masses. Be different. And again, being different basically translates into, in most situations, you've got to go against the grain. And that's really, really tough for people to do.
Okay. You know, of course, tax season is over.
Yeah.
And now it's tax planning time.
Tax planning, exactly.
And of course, you've got now NelsonCorp tax people down there.
Yes, real crucial. And we're in the midst of trying to roll out a new offering as far as to individuals, as far as clients that we work with, as far as, again, even being more proactive. We think we're in a different world, and to some degree, we hope we're wrong. But the new world that we think we're in, as far as from a tax perspective, the rules have changed a little bit there, but as far as incorporating the investments and making the decisions on the investments and factoring in all those tax situations is really, really key. And unfortunately, most people don't do that. And so what we tried to do is to incorporate some of those concepts and ideas. We have some new technology to be able to help illustrate this stuff in the future. That's always been the big challenge, is you can talk concept to people about this, but at the end of the day, most people don't get it. So we've got some real talented people as far as in that area. We've got some real talented people on our side as well, the wealth management side. We've added 2 heads as far as in the last, give or take, 2 months. We're excited about that, as far as one that will be primarily behind the scenes as far as assisting advisors. We'll have another one that is becoming an advisor. It's really needed. I mean, we are in a growth trajectory like we have never, ever witnessed as far as in our career. Not just locally here, but down in Davenport, up in Dubuque. We're getting a lot of people that are coming in saying, help, I need help, I'm confused, et cetera, et cetera. And we're saying, okay, again, here's the information that we'll need. But being thorough and understanding as far as where you are, what you're trying to accomplish, again, it's not a one-person job. It needs to factor in a whole bunch of things. The other thing, just real quick, and I know we're almost out of time here, as far as the estate planning issues, we've had 2 individuals that have come into us just in the last probably 30 days where somebody has passed away and the ducks weren't in a row, and man, they got a mess. So we talk to people a lot about the importance of doing their estate plan, and people say estate plan just for people that have big money. Trust me, you either have an estate plan for yourself, or when you die, the state has one for you. Illinois has one for the Illinois residents. Iowa has one here, and it's not what you want. So you want to put something in place. It's not as complicated as you think. It's not as expensive as you think. And the bottom line is we can help on the front end. We don't draft any of the documents, but we can help advise you as far as some of the ideas and some of the things that you should talk to the attorney about.
Dave, great to see you.
Yeah,
thanks so much for coming
Thanks,
in today.
Gary. Appreciate it.
Financial Focus is a production of NelsonCorp Wealth Management in Clinton and Davenport. The opinions voiced in this show are for general information only and are not intended to provide specific